Where are you in your journey? Are you just starting out? Are you experienced? How much time do you have?
Ooh,
How
yeah.
much money do you have? These are all important questions. What are you trying to ultimately do?
Hey, everybody, Jake and Gino here. And today we're discussing to general partner or to limited partner, to GP or LP. That is the question. Gang, when we started out in 2011, we didn't even know what a GP or LP was. We were just buying deals, okay? Many people fall into both categories. But the question is, what's good for you? It may be good. What's good for one investor may not be good for you. So today we brought in Mr. All Things Multifamily Partnerships, Gino Barbaro. Gino, how's it going?
Jake, that's a good question. Had a rough podcast show this morning, a little emotional. And when you gave me this topic, I said to myself, does there have to be a right or wrong? Can't you do both?
Ooh. Is it absolute? Here, Gino, here's the question. Ultimately, how do folks decide, should they GP or LP? But it sounds like you're saying there might be an option in here.
I am saying that. And for the average investor out there, the first thing they need to do is, where are you in your journey? Are you just starting out? Are you experienced? How much time do you have? How much money do you have? These are all important questions. What are you trying to ultimately do? Leave your job in the next 2 years and go into multifamily full time? Or are you trying to create a retirement account over the next 20 years? These are all things you need to reflect upon. What
you like to talk about the components of a partnership and the things people can bring to a table. I think that's in alignment here as well, no?
Absolutely. So, for a limited partner, when you're in a limited partner in a deal, it is actually wonderful. The only problem is, and I know for all of you out there, go to jakeandgino.com and check out all the resources we have on syndication, on the buy right, the manage right, the finance right. Limited partners, you don't get a pass. This is not a mutual fund where you're just throwing money at somebody and saying, hey, I'm going to be limited. I'm not going to do any work. There needs to be work done on the front end. You need to know how to underwrite a deal. You need to actually know if the market works for you. You need to know the sponsor of this deal if they performed, because you're giving somebody your hard-earned dollars.
You're a steward of that money. You're not just someone that's like letting it rip, right?
And you're a responsibility junkie. For anybody listening to this show, you're all responsibility junkies. So when the deal goes south, don't go be blaming the sponsor. Take it upon yourself because you didn't do your work. And how do I know that?
Picked the wrong horse. Yeah.
I've messed up on a couple of deals early on in my career, my investing career, and I always wanted to blame the other side or my partner for a mobile home park deal or for any other deal that went bad. Ultimately, the responsibility fell upon myself because I didn't do my due diligence. So as a limited partner, if you have a high-paying job, if you're an attorney, if you're a doctor, if you're a surgeon, if you're an engineer, and you don't have the time to do this job full time, I think the limited partner side is excellent. Find a sponsor out there doing the work, invest as a limited partner, and truly, that money truly is passive. That's the way I would look at it. I mean, and if you're somebody who is a general partner and you're doing deals and you know what, I need some time to myself. I got this $500,000 nest egg here. I want to invest in somebody else's deal. Well, invest in somebody else's deal as a limited partner. It's a great idea. It's a great way to actually get some kind of diversification where you have your own portfolio going on and you like this sponsor in Dallas, Texas, but you're living in California and you can't invest in Dallas and do your own deals in Dallas, but you know a sponsor who's crushing it out there. Put some money on the limited partner side. Now, as a general partner, you're going to be signing on the debt, taking a lot of that risk. You're going to be doing a lot of the work. So are you up to that? Are you up to sleepless nights? Are you up to water main breaks in the middle of the night and you have to run out there?
But Gino, that's just for the property manager.
Ultimately, we all know what that means, Stenziano. It falls upon the sponsor, and there's no right or wrong answer in this. We've been general partners, and what I like about our deals, when we're general partners, we invest on the limited partner side as well. So GPs should grab the money that they get and put it in their own deals.
Put your money where your mouth is.
That's right, baby. You invest in your own deal. Put some skin in the game. Show your limited partners that you are invested in this deal and you're investing side by side with them, your hard-earned capital. So general partners really need to stop and think, hey, Do I have what it takes to sign in the debt? Do I have what it takes to actually see this deal go through, to create a business plan, to put the whole deal together and to execute on this deal? And if the answer is yes, there is no better way in real estate than getting a deal as a syndicator and using other people's money and getting tax benefits, getting cash flow, getting those fees. You will become wealthy if you become a general partner and you execute properly.
If you're currently educating yourself on multifamily, I think becoming a LP is a really good way to further that education. It's not going to be a one-stop shop, but it'll help give you further exposure to what's coming in the future. And you can also then sit back and say, well, I want my shop to look like this. I like what this person has done here. I don't like what they've done there. And you can start to frame out essentially what you want your business to look like. So I think it's a great opportunity to get further exposure. And it's kind of like secret shopping. And you have, your money going to work for you. So I think there's a lot of benefits early on in your career if you're going to start a syndication shop to starting out as a limited partner, getting that exposure and underwriting the deal as well alongside the team. Look, no better way to do it than to actually put things in action and start, really just going through the motions of what it is to be an investor, right, Gino?
Jake, you make a great point in that. All of a sudden, you're not just investing on the sidelines and looking at deals. When you start putting your own skin into the game as a limited partner, all of a sudden you take things seriously. You're actually looking the deal. You're tracking the deal. You're actually investing in that deal and seeing how it works, getting on monthly webinars if your sponsor has monthly webinars or quarterly webinars, and or the opportunity to go out and actually visit the deal. And then ultimately you're building up your portfolio. So when you're talking to brokers, you can say, hey, I am an equity investor in such and such a deal. So it does help you build up your resume as a limited partner. So then when you do transition to become a general partner, you've already got a couple of deals under your belt as that limited partner.
And there's no better way to protect your baby money soldiers than essentially doing the underwriting work and vetting the deal thoroughly. So you're not only doing your money right, you're also doing your brain right because you're educating yourself and you're furthering your education. We talked about different keys to partnership. So there's having money, there's experience, deal flow, all these different things. If all you currently have is money, start getting educated, start potentially investing in unlimited partnerships. That's a great way to further your knowledge and get you prepared for good things to come in the future.
And Jake, when you say that, that makes a great point because all of a sudden you're getting exposure to the team members that general partnership is using, what property management companies, what
huge.
Brokers, what's going on in the market itself. All of a sudden you're taking a look underneath the hood because you're invested in that deal. You're getting the offering memorandum, the private placement memorandum on that deal. You're getting all the knowledge and you're learning firsthand. You're able to go fly out and meet that property management company out there. You see the syndication attorney that they're using, the CPA company that they're using, all these different team members. And if you're going to be investing in that market, hey man, that's a leg up right there. You've got a ton of value from investing in that deal.
Well said, sir. So, gang, as always, we believe in buying deals for the long term. Think in decades. I'm Jake. He's the G Daddy, and we make it happen. We'll see you next time.